Here we have the 2-hour price chart for SoFi Technologies Incorporated, stock ticker SOFI. So as we can see here, the stock is having some very clear trouble overcoming the prior price zone that we outlined in prior videos. We did suggest that this would be a resistance level that would be difficult to overcome. So in this video, we're going to outline some specific support and resistance zones that might be able to be used for trading strategies for this stock going forward. So currently what we're looking at here is an ultimate price high that came in at $7.52. I have not changed any of the markings on this chart, any of the trend lines or the arrows or anything like that. And as we can see here, the resistance zone that we were expecting to see comes in at $7.52. And this was based on the fact that this price level represents the 78.6% Fibonacci retracement zone of the price decline that came in from $7.95 to $6.01. So essentially, this is the price movement here, the price trend wave that we were looking at and using to identify as the dominant trend wave for this stock. So as we can see here, using that type of analysis, we were able to come up with $7.52 as an upside resistance target here in anticipation of achieving those near-term highs around $8. And as we can see here, the share price has fallen over and started to roll over here after reaching that area. So specifically what we need to point to at this point can be found in this rising yellow line here, which is the 20-period exponential moving average. So essentially what that means is it's the moving average of the prior 22-hour trading periods, because what we're looking at here is the 2-hour price chart. So essentially, we can see that prices have managed to find some support in this area. If we drill on the prices a bit here, we can see that we are seeing some turnaround potential coming in right around this 20-period EMA. So this is significant here going forward, because we can also see some crossover activity in the underlying moving averages below these current price levels. Specifically, what we have here is this rising orange line, which is the 50-period EMA, and this is crossing above both the 100-period and 200-period exponential moving averages. So what this tells us here is that the trend momentum is starting to focus more strongly in the upper direction. However, in order for us to retake this $8 level, what we really needed to see was a test of this 752 level, a bit of a pullback from there. And then now we can sort of allow the stock to recover. Some buyers can enter back into the market. And now there's a better possibility here that we could start to see some share price gains going forward in advance of this level. All of that said, there is still a bullish outlook to be had here, but I do want to just sort of make mention of the fact that these excessive outlandish double-digit price gains. I think I've seen $30. $20 and things like that. I mean, these are excessive price movements, and anybody that's actually expecting those types of price movements from this stock, I do believe you're going to be disappointed. I mean, I just don't think that that's a fair outlook or assessment for this stock, given the current price action and the fact that we have had some trouble sort of gaining traction here in this $6 to $8 range. So as things currently stand, that doesn't mean that the outlook is all negative here. We have seen share prices move lower out of overbought territory. So as this recent price movement higher was occurring, not only did we have this $7.52 resistance zone, but we also had an indicator reading in the relative strength index, which did show that prices were starting to become overbought. So when you put those two things together, it's very difficult for the share price to sort of exceed these near-term levels. Becomes close to being impossible at that point when you've got more than one technical indicator working in conjunction with one another to sort of prevent prices from moving higher. However, now that we've seen a test of this level, the market can sort of regenerate itself, and more buyers can enter into the market. And this does suggest that share price action could start to see an upward break here relatively soon. Currently, what we're looking at is a share price level coming in at $7.30, and the most recent price low came in at roughly $7.13. So the $7.13 level is going to be critical going forward, because If we were to fall below there and then possibly fall below 695, what this would mean then is that we've fallen below the exponential moving average. If that were to occur, this would be a fairly significant movement lower to the downside. And we would really have to start to look at this broader downtrend here as having a bit more force. So here I will draw the expected trend line. This would be the worst case scenario here. If we were to see a price failure below the exponential moving average cluster, and essentially right now this comes in at $6.95, that would suggest that a near-term top is in place and that a retest of this $8 level would become increasingly unlikely. So there are a few different scenarios here that people need to be aware of. And these price levels are important as far as being able to properly structure a trade, maybe scale down if you are long the stock, and you're committed to the stock and you want to continue buying. You want to buy into support zones rather than just sort of wait for this weird expectation that prices are going to be going to $20 per share in the next 3 weeks or something like that. I mean, it's complete nonsense. And it's really surprising that YouTube even allows that type of video to be posted, because it's just completely ridiculous. It's based on absolutely nothing. I mean, $20 is a random number. I mean, why not 25 or 35 or 15 or any of these numbers? I mean, $20 is clearly just a random number that was pulled out of a hat. So, more near term, there are some significant questions here that will need to be asked, and we will get that information after we either break above this 752 level or break below this $6.95 level. If we do see a break below there, you do reasonably have to expect share prices to continue to move lower. And then from there, the next level of support to the downside essentially comes in at $6.32. Anybody that would consider to buy the stock into that area, I think that's probably an acceptable price level to start to look at adding to a long position. However, the real line in the sand here comes in at $6.95. Because a downside break from this area would suggest that a near-term top is in place, and that $7.52 level is more likely to hold for a longer period of time. So here's the current market update for SoFi Technologies Incorporated, stock ticker SOFI. Our high-value trading strategies membership is currently available for a limited time for only $9.99 per month. These high-conviction investment strategies are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.